Hi, everyone, and welcome to the Goblin Hideout, the NFT Finance Podcast. My name is Terry, and today I'm joined by my co-host Ryan. And today we're speaking with the founder of Solv protocol, Mike Meng.
Hello, everyone.
Hey, Mike, how's it going? Super glad you're able to join us and come on the podcast. Really appreciate it.
Thank you very much.
Yeah, absolutely. And I think to kick it off, maybe let's just do a little background. If you could provide just background on yourself, and then also what were you doing before crypto, and kind of how did you get into it?
Okay, my name is Meng, and my English name is Mike. I am one of the co-founders of Solv protocol. Before I started this project at October 2020, I actually had been a long-term educator, evangelist, and a public speaker in China in Chinese blockchain community. And before I started my career in crypto, I worked for IBM for 8 long years. Yeah, that's basically me.
That's awesome. And then let's maybe jump into Solv. So if you could just give a high-level overview of what is Solv protocol, and can you just do a short introduction to the marketplace and the voucher products that you guys offer?
Sure. Many people asking me what Solv is. It's a little bit complicated because we actually, if you want to understand what Solv is, you need to understand at least 2 or 3 concepts, right? So first, Solv is market. It's a market like OpenSea. So if you compare Solv to OpenSea, they are similar. They are a platform. But we are a market like OpenSea for something called financial NFTs. So the second concept is financial NFTs. Not everyone know or has heard of this new concept. So financial NFTs is the product Solv enable the users to trade or create on our platform. And the third concept is ERC 3525 is a token standard, which is a tailor-made token standard for financial NFTs. So Solv marketplace, financial NFTs, a special class of digital assets, and ERC 3525, the token standard for financial NFTs.
That's awesome. And I know you have a few different kind of products. Maybe let's start with the vesting voucher. Maybe give a quick overview of what the vesting voucher is, who's used it and for what, and what traction has been like so far.
Sure. The vesting voucher is, I sometimes, I think it's easier to describe the vesting voucher as a magic envelope with a time lock. So you can, it's NFT. First of all, it's NFT. Then it's magic NFT because it's more like an envelope. You can enclose some tokens in the envelope and burn a releasing schedule into that time lock. So the envelope enclose and lock the tokens, but it can unlock the tokens according to the predefined schedule. So let's take an example here. If you can, for example, you enclose 10 ETH into that envelope, that vesting voucher, and then you can set up a releasing schedule, say 1 ETH per week. Or you can set up a schedule, let's say one-off release at 9 p.m. Tomorrow. So it's functionally it's just a work like this. But why we call it vesting voucher is because it's a perfect tool for for a project to represent its vesting tokens, or we sometimes call it token allocations. So we call it vesting voucher. And currently we have partnered with more than 70 projects. And there are, I think, more than 20 projects in the queue. So it's our upcoming partnership. And we have more than 70 million digital asset in total value locked. We have more than 10,000 addresses that have interacted with our Solv DApp. And we have more than 20 million cumulative trading volume on our marketplace. So it's pretty good. Name some partners of Solv. We Paragons, Dodo, Cold Stack. They both all of them issue high volume of vesting vouchers on Solv. And we have also ClearDAO. They issue 42 million worth of the vesting voucher on Solv. The High Street 5 million, in finance 8 million. So many of the list goes on. We have a lot of partners, and what we have done is pretty good. Even in this bear market, I think we are good.
Yeah, wow, that's amazing. Just the number of partners that you guys have on board and the traction that you guys have experienced. I guess one thing I'm curious about is within the use cases that you've seen among these 70 partners, my understanding is that a lot have been for fundraising, essentially, selling vesting vouchers as sort of like a fundraising mechanism. Has there been any other use cases that you've seen, perhaps for like community building or compensation distribution, or like what else could be theoretically done that you guys have thought about and ideated on that maybe hasn't been done yet with these vesting vouchers?
Yeah, I think the vesting voucher is a great tool for both development team and for the community, for both sides. For development team, you just mentioned fundraising is a very important use case, because if you use the vesting voucher to do fundraising, it's basically you're selling your allocations. So it's a form of token sale, but you don't need to worry about the price dilution or selling pressure. But you can also regard it as allocation management tool, because it's much more easier and much more efficient for a project team to manage their allocation, to distribute their token at the predefined dates. And also it's a community building tool, because you can use the vesting voucher to incentivize community, again, without worrying about the selling pressure. For the community, it's a bridge for you to invest in early stage projects on the level playing field with institutional investors, right? It's also you can actually many project teams offer a steep discount, so you can purchase the allocations at this steep discount. And also it's you can trade the allocations before TGE that offer you very, very good liquidity or flexibility, because some project reach a very profitable, some tokens reach a very profitable price level before TGE, so you can actually sell it. Okay, so I think it's both good to the dev team and the community. Yes.
Yeah, that use case makes a lot of sense for us, right? Because previously this market for like primary shares prior to any like token generation event or an IPO were inaccessible to most retail traders, right? This is like something that venture capital had almost a monopoly over. But now, instead of using these OTC markets, we can kind of clearly see what the composition of is, like what the vesting schedule is, and retail can participate in this market too. I guess one thing I'm curious about is I recall hearing you in an interview say that financial products is money plus logic, and that DeFi and NFTs make like all of this composable. Like it puts money there, and then it puts property there, and then it makes everything composable. What are some products that you see synergizing with the vesting voucher? Like what are some use cases of financial NFTs used with NFT finance that might be interesting to you guys?
Yeah. This is absolutely a very important use case. And in DeFi, we actually cherish the ideas of Lego, right? Lego blocks. So yes, first of all, I would like to explain why I think financial NFTs as the logic plus money, because financial products are financial contracts by its nature, by their nature. They are promises and instructions on how to handle money or asset, right? So financial NFTs are backed by financial smart contracts. So the smart contract, the code, actually are logic. So we program, we code the logic into the financial smart contract, and then back the financial NFTs, and to enforce the rules and the terms to regulate or to control the flow of the money. So having said that, a financial NFT is an NFT and can be used as NFT. So it should be easily incorporated into any NFT apps. You just mentioned a very useful use case. We have talked with some NFT lending protocols, include NFT Fi. Our financial NFT can be very good collateral in any NFT lending protocols, but because our financial NFT are ERC 3525 tokens, and ERC 3525 token standard is compatible with ERC 721. So any of our financial NFT or our vouchers are standard NFT, standard ERC 721 NFT. So any NFT lending protocols which support ERC 721 NFT as collaterals can support our vouchers. I won't name those NFT lending protocols, but they said some of them said that vesting vouchers are generally better collateral than NFT arts or collectibles, because the price discovery mechanism with the vesting vouchers is way better. It's more predictable than normal NFT. So I haven't dove into the interest rate or swap on other ideas, but I think there are a lot of potential use case for our NFT to be incorporated and to be as Lego blocks to be worked with other NFT protocols, I think.
And then Mike, can you like with the vesting vouchers, can you vest tokens according to anything other than just the timestamp?
Yes, actually, currently we are only for the timestamp, but we will gradually add new features to the vesting voucher, and someday we may develop it into so-called conditional voucher. Basically, such a conditional voucher locks some tokens and lessons on a series of conditions. When a specific conditions are met, the voucher will release some tokens. So the timestamp or time is just one type of such conditions, and we implement it first because it's very useful. But you can easily think of more conditions, more types of conditions. For example, blockchain states and Oracle data feeds are two types. For example, you can seal, you can enclose some tokens in this financial NFT, in this vesting voucher, and say when the Bitcoin price is higher than say $80,000, you can take out the 10 ETH in this envelope. Eventually, we will implement such kind of so-called conditional voucher, and also we can do something more. Say we can and then another possible condition can be the token inflow, such as you need to first pay 1,000 USDC to this voucher to take out the enclosed 5 ETH in it. So it's actually an alternative implementation of call options. So yes, so generally we will improve the vesting voucher to I should say general purpose conditional vouchers, but it will take time.
Yeah, that's actually super cool. And as you said, quite similar in payoff profiles to a call option or other option. On that note, like I think the listeners got quite a good representation of the vesting voucher, but I understand that you guys also have other voucher products. I'd love to hear more about the bond voucher. What is it? Yeah. How does it work? And who's using it right now?
Yes, bond voucher is now our star product. Actually, first, it's just an IOU. It's a promise to repay debt obligations in the future. So you can deposit some tokens into the bond voucher as a collateral, or you can sell it as an uncollateralized bond. Make this a credit loan. So it's very flexible, and you can sell it and get a loan. At a maturity, you need to repay the specific number of tokens, normally stable coins like USDC, USDT, to the bond voucher. Yes, it's actually a bond voucher as a financial NFT can receive tokens. So it in this regard, it's like an account or a smart contract. It can receive or send tokens. When you as the creditor pay off the debt, you will allow to withdraw the collateral, the underlying collateral, and to terminate the bond. You can add a call option into the bond. We support this in a native way. Means that you can offer your investor or debtors a special privilege to allow them take a collateral instead of accepting the repayment if the value of collateral is higher than a predefined line. So they basically work like this. But I would like to point out there is a magic in the bond. You remember that if you know the token standard ERC-3525, it's actually a fractionable. I mean, you can split it into pieces, and you can merge it back. So if you have a bond with say 1,000 USDT for its face value, that means I will pay you 1,000 USDT in the future. You can split it to many pieces before maturity. If say you split it into two pieces, and Terry, you hold the one with 600 face value, and Ryan get the other one with 400 face value. Then at the majority date, when I repay the 1,000 USDT to the original bond, Terry will get the 600 USDC share, and and Ryan will get the 400. So we do it. We do the automatic split of the payment. It's all automatic and all automatically enforced. Yeah. So this is basically how the bond voucher work.
Got it. That's super cool. And also considering how many projects, or not anymore, but used to raise their convertible bond offerings, I feel like the combination between a vesting voucher and then later on in the lifetime of like a protocol's life cycle, a bond voucher makes a lot of sense, and economics is a protocol. Is that how you guys are sort of thinking about it?
Yeah. First of all, the project dev teams in old days and DAOs, I think, they need debt financing. Currently, most of the common way, most common way to raise funds for them is just by putting your allocation on sale or directly sell you unique tokens. But selling too much tokens could backfire in the future. Many good projects have failed just because they couldn't handle the selling pressure, right? So debt financing, I believe, through the leveraging collateral or reputation, can greatly alleviate the problems. We believe that the crypto industry need such kind of debt financing mechanism. So we create these tools, this facility, and this market for our partners, and it runs well so far. Also, I would like to I'll give you an outlook. Especially in recent weeks, we witnessed the crash of the market, and it's greatly due to some centralized institution. I don't blame them, because many centralized institutions play a major role or very important role in this industry. But I think the crypto industry needs an inter-protocol money market to create a liquidity and manage the leverage and term risks. This, I think, inter-protocol or institutional money market will help the centralized institutions to better manage their risks, and for themselves and for the overall market, for the overall industry. So in such a market, institutional investors and whales borrow and lend large amount of money every day, I think, and using the bond tokens, using the say commercial paper equivalents. With these such kind of facilities can greatly stabilize the market and control the risk, and at least help us to alleviate the pain when the bearish market comes. So the bonds, I believe, will play a central role in such a money market. We can build bond tokens like to represent short-term bonds, overnight bonds, repurchase agreement, things like that. We expect the Solv's bond voucher and its variants can become an industry-wide facility for the whole market, and maybe it can help us to stabilize the whole industry, the whole market. Yeah.
Yeah, that absolutely makes a lot of sense. And I think that's something that we've been deeply thinking about as well. So yeah, that was the bond voucher, but I understand you guys have even more additional products that are kind of in the works, but also in the early stages. Could you perhaps also talk about the Ricardo voucher or the Dream voucher as well?
Yeah, sure. Ricardo voucher. It's still in the very early stage. Actually, it started from a product called SAFT voucher. The SAFT voucher, SAFT. I know you must know what SAFT stands for. SAFT means simple agreement for token, right? So it's a common legal documents for a project development to sell its token allocations. It's a legal document. It's usually in PDF format and signed by both parties. We are developing a new product called theft voucher, which represent the right of receiving tokens at specific times. And the key features of this theft voucher is that it's backed by the PDF legal documents. So with one click, you can read the PDF file, which will be stored on a distributed storage system. And so basically, this voucher is like theft documents. It's a way to represent the token allocations, but it's much more flexible and liquid than theft document itself, right? So it serves the similar purpose to vesting vouchers, but it's more easier to create, because you can, if you have this you have this theft agreement, you can create the theft voucher yourself. Can be profound because we regard it as the first step towards Regarding voucher. Let me explain what Regarding voucher is, right? Regarding or Ricardo voucher is a name follow the convention of Ricardian contract. Ricardian contract is an idea first conceived by an expert called his name is Ian Grigg, I think. The time is 1996. I should remember it. Ian Grigg, 1996. To put it simply, a Ricardian contract is a computer machine code smart contract with a human readable textual documents as its companion. The machine code is for computer to execute. So it's it's like the Solidity smart contract. But the point is that it also has a document, human readable textual document. It's for people to read. The two forms of the contract represent exactly the same thing, the same contract, the same terms. So this is a Ricardian contract. Similarly, the Ricardian voucher would be a financial NFT backed by a smart contract and a textual documents. So the documents most likely will be stored in decentralized storage systems as PDF files, and it can be stored in things like in system like a Filecoin or Arwave, things like that. The system like that. The theft voucher can be a very rudimentary example of Ricardian voucher. It's backed by a theft document, right? But it doesn't have enforcing smart contract to guarantee the issuer will really distribute the tokens he had. So it's just a promise. It's legally binding promises. But we believe so. It looks like it's loose form of a financial NFT, because we didn't utilize the smart contract, the code, or blockchain to guarantee the contract. But we regard this as an easy way to map your asset onto blockchain. You can easily, to create a voucher, you can easily, just design the appearance of the UI, then upload and back it with your legal documents or certificates you have, and then you got a Ricardian voucher. And I think millions of people can create digital asset on blockchain in this way. So we look forward to see many use cases of Ricardian voucher. Certainly, we will improve it in the future. And so this is a Ricardian voucher. Does it make sense to you guys?
Yeah, that makes a lot of sense. And I do want to later ask a lot more about sort of financial NFTs and legalese and maybe like the application of something like that and bringing like real world assets on chain and the Oracle problem that a lot of people are talking about right now. But before that, like I'd love to also hear quickly about like the Dream voucher that you mentioned before.
Yeah. Dream voucher. Dream voucher is a quick and lightweight solution for project teams to do airdrop and other forms of incentivizing program. We originally named it as airdrop voucher, so you can guess what it will be used for. Actually, project development team can use Dream vouchers to incentivize the community before TGE. Many project team want to incentivize the fans, but they hadn't issued their token, so they need a way to incentivize to award their community, and the Dream voucher are in general it's just a word promise. So issued by the project development team, the holders can expect to claim a real awards in the future, such as tokens or NFTs with the Dream voucher in their hands. The development team defines the exact values, rights, and terms of the Dream vouchers. The Solv actually we just provided tools. We don't guarantee the dev teams follow their promises. So it's just a flexible, lightweight tool. It's NFT. The dev teams can use NFT to do the same thing, but it's not flexible as ERC 3525 tokens, because the Dream vouchers can be splittable, and it has higher liquidity. So I think basically it's as simple as this. We create this under the suggestion from some of our partners. Some partners asked us to make it for them. So it's I think it can be a very useful and dynamic and a vivid voucher, financial NFT, because those development team will, they will design some fancy appearance or UI to create those vouchers, and they can invent some new innovative. I think the ways to use that. I'm looking forward to seeing the how people could play with this Dream vouchers.
That's excellent. And I know you've touched on this a little bit already, Mike, but can you talk about kind of the importance of the 3525, the ERC 3525 data structure, and specifically what token ID slots are and why they're important to the protocol design?
Sure. I think I should first introduce what ERC 3525 NFT token standard is, and why we created it and designed it in the first place. It's actually a token standard, right? We designed it specifically for financial NFT. So so you can actually use ERC 721 to represent financial instrument like say treasury bonds, bills, certificate of deposit, commercial papers. So why bother to create or to design a new token standard? Because it's financial instrument and the liquidity is crucially important. So we think that it's not it's different from your daddy's financial and your daddy's NFT arts, because you will be wanting to split it, to fractionalize it. So the most notable difference between the ERC 3525 token and ERC 721 NFT is that the former is divisible and the latter is not. It means that you can split an ERC 3525 NFT into many pieces and later merge them back if you want. So having said that, I'm going to explain why we have this token ID and especially the value and amount properties in the ERC 3525 data structure. We have these three key attributes or properties: token ID, value, and slot. And token ID is universally unique ID for the financial NFT. So it's easy to understand. We inherited it from ERC 721, so you can find it in any ERC 721 NFT. Value is used to indicate the quantity of underlying asset. It's inherited from ERC 20. So basically, you can regard the ERC 3525 voucher as as a superset of ERC 721 and ERC 20. It's very technical, but I will try my best to explain it clearly. So the slot is something special. We devised this mechanism from ground up. So let me explain it. I will try my best. A slot is a collection of attributes. For example, the slot of a bond voucher consists of following attributes: who is the issuer, what is a collateral token, what is the maturity, and what is the monetary unit of the face value, etc. So two bond vouchers with the same slot values are the same type. So hence can be merged. I think does it make sense to you guys? Because we support the ERC 3525 NFT support split and merge. So when we merge two pieces of NFT, financial NFTs, we need to first identify them to be the same type of voucher, right? So the method with development, the mechanism with the development is to compare the values of the set of the attributes in these two vouchers, and if all of the features, all of the attributes are equal, that means that these two vouchers are the same time, and we can merge them back. We use things like the philosophy behind this is that if it works like a duck, quacks like a duck, then it's a duck. So we compare a set of attributes of an object to decide whether it belongs to a category. So I know it's a little bit difficult to explain it because it's very technical, and we spend a long time to devise it. and to improve it. But I think this is the overall idea. Do you think it's clear enough?
Yeah, I think so. So, and just so I understand, it may be a question that is a little less technical, but what comes out of combining fungibility with non-fungibility?
It's actually a story behind that. We, you remember the DeFi summer, right? It was from the June to maybe September of 2020. So in August of 2020, the three co-founders of Solv sat together and say that it may be the good time for us to do something in crypto, in DeFi. And we took a hard look at digital asset and enumerated all forms of digital asset, both in TradFi and crypto. So we found something. We found something missing in the crypto. Let's say this: in traditional finance, we had currencies and equities, right? While in crypto, we have ERC-20 tokens. And in traditional finance, they had properties, land titles, items, and we in crypto we had ERC-721 tokens, NFTs, to represent those heterogeneous items, right? All good. But in traditional finance, they had things like cash notes, like bills, commercial papers, but we didn't have counterparts in crypto. So it triggered us. We said we thought maybe it's a good opportunity for us to create this missing part for crypto, and that's why we came up with the idea and create a new class of NFTs that is infinitely splittable to ensure that they are always liquid. So you can slice whatever size you like from a financial NFT. You don't need to once the specific amount of the financial NFTs you like to make the deal. So this is how we first conceived the idea. But I would like to point out that ERC 3525 is not only about semi-fungibility or fungibility. It's actually also about being information rich, expressiveness. These attributes are not found in ERC-20 tokens, but you can put many information on ERC-721 tokens, but the latter is too rigid. I would say that we have this UI, we have this phase. You can put a lot of information on the ERC 3525 vouchers, and all the information can be extracted from the underlying blockchain or from the Oracle data feeds in real time. So it's very transparent, and the transparency is a crucial feature. It's crucial for the financial products, right? So I think it's both for fungibility, semi-fungibility, and for information reach. But I would like to say the standard is still nascent, and a lot needs to be done in the future. But we think we already have a very good start.
Yeah, that makes a lot of sense. And just as the standard is nascent, right? The field of NFT finance that is quite nascent as well, and specifically within NFT finance, or kind of as an auxiliary to NFT finance, is the field that you guys are playing in, which is financial NFTs. I do want to touch on this point because you mentioned it quite many times. But what is the vision for you for financial NFTs? Like, where are they going? How do you think it will interplay with NFT finance? And really, what are the roadblocks? Is it regulation? Is it sort of the difficulty of putting real world assets on chain, like, is that not like a development direction you see going? I'd just love to hear your opinion about financial NFTs.
Yeah, we believe financial NFTs is perfect form to represent a majority, I should say, many types of many classes of assets. Both, as you said, it's very good for us to port to map the real world asset to blockchain, and it's also very good form of representing the novice digital assets like commercial paper, like options, futures, especially like portfolio funds, the ABS, MBS, a lot of financial asset can be easily represented as a financial NFT. So I think our vision is to use this new token standard to represent many types of financial asset, financial instrument, and create a market for people to trade this new class of digital asset, and that will I would believe that can be play a big part in the future in the futures of the crypto industry, and it can be a strong support to the Web3 industry, because we can think of many Web3 assets that can be best represented as financial NFTs. So yeah, this is our vision. But as you just mentioned, regulation. Yes, we would like to evaluate. I mean, we would like to work with the legal. The legal industry or lawyers to find the best way to incorporate the regulatory features into the financial NFTs. So and we devise everything very carefully. So let's see what we can do, because regulation is something that is a common problem for all of us, right?
Yeah, that makes a lot of sense. And especially within the context of real world assets, bringing them on chain. I feel like regulation, right? Whether that's like accredited investors laws and registered security like filings in the US, or like the other problem that a lot of people mention is the Oracle problem, right? Like who gets to put it on chain, and who gets to update the parameters that are then, that will have then rippling effects across NFT finance and DeFi. I guess, like, how do you guys think about those two problems in terms of getting like real world assets on chain to like a mainstream moment?
First of all, we just mentioned Ricardian voucher. Ricardian voucher can be backed by legal documents. So this can be a good start to do that. Second, I think we should establish things like DAO or a review committee, the mechanism like that to evaluate and to instruct the process of doing that. Maybe we can collaborate with law firms, and maybe sometimes in the future. It's not only us, but the whole crypto industry should lobby the lawmakers to do something to facilitate the creation of digital assets and the portion. I mean, how we can port our offline asset onto blockchain. This should be a collective effort. We can play a part. We can play a role in that effort. We hope we can do that. Yeah.
Yeah, got it. That makes a lot of sense. And I guess just to round it off, would love to hear about, for the listeners out there, how can they get involved in Solv? How can they learn about more? What can they do to contribute to the ecosystem?
Yeah, first of all, the ERC 3525 is an open standard, open token standard. Everybody can read it, and most of our smart contracts are open source. So everybody can create their version of vouchers. So actually, this is not just a guess. Actually, we have 3 partners who are working on their own financial NFTs. I believe 2 of them are working on options, their version of options, and we look forward to see their outcomes. And also, if you want to create a vesting voucher or bond voucher, and you want to sell them on Solv, currently we are still, we need you to find us, to contact us, and we can help you make through the process. But eventually, we will make the whole process permissionless, so everybody can do that on Solv platform. Yeah.
Awesome. Thank you for your time today.
Thank you very much, Terry.
Follow me on Twitter. I'm 0xTayTayHoHo on Twitter. That's Tay with an E. And you can follow Ryan at _Helmass.
Yeah, and that's _HELMASS. Thanks everyone for tuning in, and we'll catch you soon.